Hello guys, it's Max here from Daily Market Movements, and in front of me we have the gold over the US dollar market, and as you can see today we have followed through towards the downside just as I anticipated on yesterday's video. This was a movement that I predicted yesterday once we snapped out of this blue rectangle that you can see on your screens, which is the consolidation phase that we've been trading in for the past month to month and a half between 1935 and 1850. And then yesterday we finally broke out towards the downside, and when we were trading at roughly 1840 yesterday, I said it's very likely now we're going to go and target the 200-day EMA at 1800, and that's exactly what's happened in today's trading session. I got a perfect buy entry at bang on 1800 here, so I am expecting a bounce. The 200-day EMA I expect this level to offer a significant amount of support. I expect the big big money managed firms, the hedge funds, the banks to come back in and support this level, because quite frankly, if we have a horrific daily close below the 200-day EMA, then that is not good news for gold at all. You know, that tells me we could go as low as 1600, potentially even 1500, but I don't believe that will happen. I believe that we will see a bounce here in the 200-day EMA. The reason that we broke down over the past couple of weeks is because quite frankly we've had a great set of vaccine news which has basically been sent to us over the past 3 weeks. You know, 3 weeks ago we had great news from Pfizer, 2 weeks ago we had great news from Moderna, and this week we've had great news from the University of Oxford. However, the one thing that I believe will send gold flying back towards all-time highs is the second stimulus deal. I am anticipating a second stimulus deal to happen very, very soon. We had some great news last night that Donald Trump has now paved the way for Joe Biden to move into the White House and get his affairs in place, and that is very encouraging, not just for the second stimulus deal, but for the markets overall. And that's why gold has also fallen today. That was a massive hurdle that traders were worried about, but now that's been cleared up. That's very encouraging for the stock markets, and as you can see, gold has fallen as a result of it. But one thing I do want to show you on this chart is the RSI. Look where the RSI is sitting. We're sitting just above the oversold territory. So this is an area where as I just mentioned, I expect the buyers to come back in and send us back to all-time highs. So right now 1800 is a great buying opportunity. If you haven't bought yet, please do so. You do not want to miss this opportunity. And even if you don't have a massive account, this trade is set up for a great risk-reward ratio. You could put a stop loss down at around 1750, which is way below the 200-day EMA, with a buy rating up at around the 50-day EMA, which is not buy rating, a take profit set at around the 50-day EMA, which is up and around near that $1,900 level. So automatically you've got a 2-for-1 risk-reward ratio, which is very, very, very good. So I'm a buyer here, no interest in selling whatsoever in the gold markets. Fundamentally, we will have the second stimulus deal eventually, which will then support us. Technically, we're still looking healthy. We're still trading above the 200-day EMA. This is just trading to its best. This is technical trading where gold, just because it's testing the 200-day EMA, doesn't mean that we're going to carry on breaking down. This is what technical trading is, and this is an area where I do believe we will find support. So do not miss this opportunity. Buy, buy, buy.